Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and
hello there. I'm Yatin Mota.
Well, Yatin, when it comes to the headline indices, new day but the same story.
Correct.
We opened lower. We attempted a comeback. We did see some green ticks, but again came under selling pressure. But the headline today is the crack in the mid-cap end of the markets.
Yes.
The mid-cap index tumbled almost 2%, during the day.
Points, I think,
900 points. At one point, it was, down by over 1,000 points. And the breadth was extremely weak. So there was a fair bit of pain visible in the broader end of the markets. The advance-decline ratio is 1:5 on the NSE. So 5 stocks declining for every stock gaining. So that was the kind of pain that was there in the broader end of the markets. But VIX was fairly flattish, so VIX has been declining, and that trend continues. But I think too much to digest when it comes to the global cues, right? I just want to mention that headline indices, although they ended lower, it was weekly expiry. We fell below 24,800 marginally so, but still we managed to outperform most of the global markets.
True.
Look at Nikkei down 1%, look at Europe down 0.5%, you also have US futures down 0.5% or thereabouts. Things are a little iffy. We had the Fed rate announcement yesterday, held steady. Of course, that was what consensus estimates were, but they have stuck to 2 rate cuts for 2025 and only one, scale it down to 1 for 2026. So that means the pace of rate cut will slow here on, and also warnings have come in terms of inflation from the US Fed chairperson. He said that inflation could tick up to 3%. In the wake of Trump's tariffs, and some impact is already being seen of tariffs on inflation. So yes, a stagflationary kind of a situation could shape up in US. That's the kind of commentary that came in. Markets digested pretty well last night, but US futures are down, and Iran-Israel conflict continues, day 6. And Israeli hospital has been targeted, wherein Iranian military and nuclear establishments have been targeted. So yes, a lot of things to digest. But when it comes to Trump, will he, won't he? That's the situation. He said maybe he will, maybe he won't. So maybe the markets are on edge when it comes to that. But frontline indices almost steady. Pressure in the broader markets. Auto only sectoral gainer. You have metals and IT extending losses in the wake of the commentary that's come in from Fed chairperson. But in terms of gainers, then individually, if you look at the laggards, Adani Twins, Bajaj Finance, Coal India, Tech Mahindra, IndusInd Bank, Shriram Finance, these were among the laggards. On the flip side, autos, as I said, did well. Eicher, M&M, were among the gainers. Hero Moto as well. Tata Consumer top Nifty gainer. Wipro bucking the trend here in terms of IT stocks, 1.5% higher. Titan, JSW Steel were the other ones. But Yatin, broader end of the markets, there weren't any high flyers, so to say. Quiet.
Correct. It was quiet, and the advance decline ratio there was almost 2:5, or even worse than that. If you look at the mid cap small cap index, clearly 2% plus cuts coming in there. If you look at the gainers losers list in the BSE 500, NSE 500, we have Aegis Logistics, Vishal Megamart clearly outperforming the markets, 3-4% higher for those stocks. Swiggy, post an IIFL report, that stock moved 3% in trade. Biocon also, remember their QIP is open, and during this period the stock is showing some strength, 2% higher for that stock. What was not doing well is First Cry, that stock fell 6%. Cyient, Minda Corporation, Reliance Power, IKS, there was a block deal here wherein a few of the company's shareholders sold shares. That stock was down 5% post the deal, and remember this is a Rakesh Jhunjhunwala family owned business wherein they are the promoters. They have not sold, but yes, a few of the shareholders have exited. Yesterday down 8%, and today another 4% down for that stock.
All right, those were the movers and shakers. I won't say movers and shakers because there weren't any high flyers with 18-19% kind of gains in the broader end of the markets today. But one pocket that was in focus was IT. Remember, this particular index has been performing well of late, but over the last 2 sessions we've seen selling pressure. Today, of course, the selling pressure exacerbated because of the commentary from Fed, and if inflation inches up again, there would be pressure on consumer discretionary spending as well in the US, and the view is that could impact revenue growth and perhaps recovery that everybody is banking on when it comes to the IT names. But of course, quite a few reports and conflicting reports, mind you, coming in on the IT pack. First of all, let's take stock of the bullish report that's come in. Good news first. CLSA, it is rather constructive on IT. It says that the broader discretionary spending is muted, amid uncertain macros. But there has been a pickup in cost optimization and vendor consolidation. If you look at the IT names and the BFSI, that's the mainstay of global IT services spending, has been seeing strength. Although other verticals like autos and retail continue to be under pressure. But BFSI has been lending strength. In terms of recovery, they are expecting a V-shaped recovery in the coming quarters, and they have also said that this quarter should see strong pickup in order bookings because deal pipeline has been good of late for the likes of TCS, etc. Infosys, Wipro. They have won quite a few deals, significant large deals, so to say. So that would reflect in the commentary from the managements. In fact, TCS also recently won a deal to modernize the European Development Bank's financial systems. So these are some of the deals that will be in focus, and on the back of that, commentary should be pretty upbeat. We're just about a month away from the first quarter numbers. So yes, keep an eye out on that. For Wipro as well, if they announce a buyback, that could be a trigger for the stock. Last buyback, I think, was announced in 2023. Over the last 6 months, mind you, IT stocks have been under pressure. So valuations, are attractive according to CLSA post the correction. And in terms of top picks, Infosys, Tech Mahindra, and Persistent Systems, they have named these companies as top picks, and they have a hold rating on LTI Mindtree. Now coming to the bearish report from Morgan Stanley, right? They say that they are baking in slight improvement in revenue growth forecasts, but the thesis of 2 years of muted growth continues. Revenue CAGR will be muted over the next 2 years. That's the thesis that Morgan Stanley is really working with. They on the contrary believe that deal pipeline and commentary confirm that discretionary spending remains weak, and vendor consolidation opportunities are also there. But in fact, they've also said that any rally or upside in IT stocks should be used to trim positions. That's a contrary view coming in if you compare it with CLSA. They have downgraded Tech Mahindra to underweight, and the target price is at 1575, but they have upgraded Wipro to equal weight, which is why I think we saw a 1.5% up move on Wipro. They like TCS, Infosys and Wipro over HCL Tech, LTI Mindtree and Tech Mahindra from the large cap universe, and from the mid cap universe they like Coforge and Mphasis over other ER&D names. But I was talking to Sunil Subramaniam, and he pointed out that whatever buying has been coming in the last couple of weeks for IT has been largely led by domestic funds, right? And FIIs haven't really been all that participative when it comes to Indian markets. But he says that once FIIs make a comeback and once we strike a deal with US tariff deal, that's when FIIs will return, and once they return, they will also look at allocations to IT. And which is why he said that IT right now is a buy on dip.
Yes, and probably a contrary sector also to move because right now the geopolitical situation, the global situation clearly doesn't augur well for IT companies, and hence Morgan Stanley is turned cautious. But talking about Biocon, and remember this company has announced that they have launched a 4,500 crore QIP. Now today HSBC came out with a note on Biocon, which was one of the top F&O gainers. Obviously there were quite a few gainers in trade today, and Biocon was one of them. They have a buy call on the counter with a target of 390. Now they believe that the 4,500 crore QIP will be essentially used to cut down debt, and also this is including the optionally convertible debentures issued to Goldman Sachs AIF. Obviously the QIP success would be meaning that the leverage of Biocon would reduce, and also the new biosimilar scaling could aid the overall turnaround as well as the earnings. Obviously, the FDA approval and the US launch of insulin Aspart is a key catalyst that one is looking at. But clearly, Biocon and Biocon Biologics, these are the two businesses wherein analysts believe that once leverage is lower and few new drug approvals come in, there could be some earnings tailwind which could help Biocon lift its overall growth prospects.
Okay, that was about Biocon, and QIP is open. Seems like there's good demand. There's a lot of paper supply, and looking at Biocon gaining in recent times since the QIP has opened shows that it is looking or inviting good interest. The other stock on my list is a Tata Group stock, Trent. Now this stock, I think we all know, was a showstopper stock in 2024, but hasn't had such a great run in 2025. In fact, YTD it's down somewhere around 20% or thereabouts. The company had its analyst meet where they outlined their growth outlook, or plan for the next decade or so. That's found favor with brokerages, although the stock wasn't all that upbeat in trade. But let's look at the kind of growth roadmap that it has for the next decade. Now, Macquarie is the brokerage that has come out with an outperform rating on the stock. The target price is at 7,200 rupees, which is over 25% upside from current levels. And talking about the analyst meet takeaways, the company has said that it is targeting 25% sales CAGR over the next 5 to 10 years, and that will be aided by store expansion into new categories, and cost control measures as well. I think during third quarter they had outlined a store consolidation roadmap, right? I think that is also something that will bear fruit. It's already bearing fruit. Obviously, the brokerage is cautious on the star format. Obviously, we've seen very intense competition in quick commerce, and that is impacting the star grocery format as well. And the company has had limited success when it comes to the private grocery brands as well, which is why I think Macquarie is cautious on the star format. When it comes to the fashion business, supply chain tech investments, that is something that will further enhance its competitive edge vis-a-vis its peers. And if you look at Motilal Oswal, even they have a buy call. Target price is slightly lower than Macquarie at 6,900 rupees. They've said that recent strong store additions for Zudio should aid growth in FY26. Mind you, I think Zudio by March 2025 had 765 stores across 235 cities. They have opened quite a few stores in recent times. And according to Motilal Oswal, the near-term monitorable should be recovery in the same-store sales growth in the fashion and the star formats. But Yatin, in the last 3 months, the stock had shown some bit of an uptick. I think it's up somewhere around 10 to 11% in the last 3 months, and the last 1 month as well. So yes, it has not had such a great run for on a YTD basis, but of late it has shown some signs of recovery. So let's see how things really pan out in terms of store openings. It has been fairly strong in recent times. On the back of that, it is expected to do well.
In Q4, they restructured also a lot of stores, and I think they are now again looking to expand their stores. And more importantly, yesterday the management commentary was good with respect to growth. They said that it might be volatile, there will be various sound bites, ups and downs, but 25% growth is something which analysts are expecting is quite doable when it comes to Trent, despite a higher base.
Well, that's about Trent then. Those were all the stocks that were on our radar, but one more day to go, Yatin. Obviously, geopolitics that will take center stage. 6th day today, and tomorrow will be 1 week to the Israel-Iran conflict, and if there is any update as to what Trump plans to do, that's what we will be reacting to tomorrow morning. But we have come to the end of this edition of Closing Bell. Thank you for watching. Stay tuned to Moneycontrol for all your other news and updates, and we'll see you tomorrow morning with the markets. Thank you.